This video is sponsored by Tradecraft. Create your tags, tag your trades, store your recordings, create screenshots, and look at your statistics. You have the ability to create statistics using several widgets. You're able to place them wherever you please, having a place where you can store all your playbook trades, and you can quickly flip through them, studying all your trades. Tradecraft is more than a journal. It is a tagging software that allows you to create the statistics you need, where you have the ability to filter your trades out on an extremely deep level, allowing you to figure out exactly where your edge might be. For more information, check out the link in the description of this video or visit tradecraft.club.
What is up, everybody? In this video, we're going to talk about order flow, volume price analysis, whatever you want to call it. So I finished reading this book called Volume Price Analysis by Anna Cooling. I've gone through the book 2 times, actually. I actually cycled through chapters 1 and 2 5, 6 times at this point. And it's really an interesting book, and it has really pivoted the way I'm looking at order flow. So if you're unfamiliar with what I've done, my name is Fat Cat, obviously. And what's up, dude? Crazy day. Hello there. Yeah, I finished the day pretty early, actually. So, and we're going to talk about order flow. We're going to look at ES as well, the order flow in ES. Probably look at some trades if you guys want to. So, as I went through Anna's book, it's interesting. There's quotes from a lot of traders that have been around well before the turn of, well, you know, the early 1900s, all that stuff. And they were talking about market manipulation back then. We're experiencing market manipulation at this point in time, and I want to go over that type of stuff. So let's go ahead and just like look at, let me pull up my journal real quick, because I want to look, just kind of go over the DOM, and then I want to ease into manipulation, what I'm seeing, and a better way to see it. So we'll do this, make sure this is working appropriately. It should be. That's the stream software. Let's move that out of the way. It's a good week so far. 3 break-even trades and no losers yet. Although my MAE, MFE has dipped low. Yeah, this is this week so far. We can see the MAE has dipped down a little bit. This should be today. So let's look at some footage of some trades. This trade actually right here is pretty damn good. And let me bump up the quality on this while we kind of sit here and look at it. Should be on. There we go. Okay, so behind me is the depth of market. What I'm going to do is just sort of zoom in on that, and I want to talk about manipulation in the market. So Anna talks about manipulation, and oh, Jesus Christ, what am I fucking doing here? Volume. Rising price should be going up with rising volume. If it's not, there's something going on. Also, price going down should be going up on rising volume as well. Rising sell volume. If it's not, something is going on. The volume bars ratio to the price action, or the price bar ratio, should be roughly the same size. If not, something's going on. It's called an anomaly. I can't even say that fucking word. That's what she says. I'm going to say some fuckery so you guys understand in Fat Cat language. So every time you're seeing an abnormally large amount of volume coming in and the bar's not reflecting it, something's going on. Now, for those of you who, I mean, I'm sure most of you guys are familiar. Then again, I do deal with a lot of new people. Let me pull up the DOM again. Where is it? And I want to zoom in on this. It's fucking live stream, so you know. Okay, so if you guys should be familiar with the DOM, hopefully. Limit order buys on this side, limit orders sell. Futures markets, manipulation in the markets are inevitable, and it is not an anomaly. Well, think about it this way. If we had 56 lots here, 47 lots here, 60 lots here, and 65 lots here, if there was no pulling, no stacking, the volume histogram, or any volume, even cumulative delta, should match the price action. So if this 56 didn't pull or stack, this 47 didn't pull or stack, and this 60 didn't pull or stack, there's no manipulation going on within this little area, because it would take exactly 56 contracts to clear that, 47, 60, 65. And if you're going to stay for the presentation, you'll see what I'm talking about, how to sort of identify what's going on and use it as trading opportunities. I mean, that really comes down to the end of it. How do you use this to actually fucking trade? Which this trade specifically we're looking at, there was a shitload of fucking buyers reloading. But that's according to her work. So if you would like to argue that, you can do that with her. I thought her book was pretty amazing. Reloading is manipulation, in my opinion. So when we look at it, so look, 14 came in here, right in this section, right? So that's manipulation. Let's see if I can get it again. I know somebody told me about. So we got 36 there. It showed 36, but a shitload of that just pulled off. Right? You got 38 right here. 7 contracts traded. In my opinion, that is spoofing. They're showing a specific size, and it's no longer there, and that amount of contracts didn't trade. A lot less traded. That's fucking manipulation. It's just a commonplace. It's a common thing. And I don't know what year it got more aggressive. The ES, especially the ES, is manipulated on both sides substantially. What you got to understand is, like, everybody can see the order flow. There's algorithms and HFTs and shit competing with each other. They all know they can see the order flow. What are they going to do? They're going to cut their shit up and hide it. Large traders are going to cut their shit up and hide it. Because if they don't, they get front ran. They experienced issues where they were getting front ran by HFTs. There's a great story. Flash Boys. I haven't talked about this in a while. If you guys have not read the book, it's fucking amazing. It's a Royal Canadian bank trader or some shit like that. His orders kept getting front ran, and he didn't realize what was going on. And then it all goes into the whole story about how they're laying down these fiber optic lines. He ends up hiring a contractor that was actually laying those lines in. And he had maps of where all these things were. So that's how they figure that shit out. But that was kind of like the way the orders were getting routed through the multiple exchanges onto the stock market. There was a slight latency in the book when it went from one exchange to the next. So the HFTs in the book would detect the order coming into the one exchange, and then they would run it on the other exchanges very quickly. But when we look at this, that's what we just saw here is this is spoofing. All that shit got pulled. Now, if there wasn't a bunch of stacking and pulling, the volume should be matching the bid offer. And that's kind of where Anna's book, when I went through her book and I'm looking at the markets, I was looking at a 1 second chart and studying everything bar by bar by bar. And it just did not look right. Every time you would see these volume spikes on the histogram, the price would not move by much. It just was not being reflected. And it didn't matter the amount of volume coming in. There'd be times where it moves a little bit, maybe 4 ticks or so. It's a 1 second chart, so you're not going to get very tall price action bars. I will say that this video is going to, at least for me, everything I'm sharing with you has been very interesting. Like I said, my trading has been pretty much 100 win rate, other than 3 break-evens this week. I've not had a 3-day period back-to-back since March where it was 3 winning days in a row. Well, without like an actual red loss. A break-even, yeah, it's a loss, but other than that, I just haven't had that. And looking at volume has, from this perspective that I want to share in this presentation, has been helping me substantially gauge my price action setups. So they're always manipulating. When I looked at these bars 1 second by 1 second, I just noticed there'd be like extreme amounts of fucking volume coming in, and the price would just not move. It would move like a tick, 2 ticks, maybe 4 at the extreme. But I would and when you would get an uptrend, even a downtrend, the way the volume is printing on a 1 second, it's like it hits, but it's like almost like there's a shitload of reloading at the tick for a tick or two. Then it might come back in and it'll spike really hard and hit, and it won't move by much. And then all of a sudden you get like this drift on like nothing. And that's kind of the spoofing you're seeing here. What's your strategy? I'm new to all this. I've been doing the buying MACD low when it dips. Not that. I don't think I can really explain my strategy. Well, I am explaining what I'm doing a bit. So it's volume. We're talking about volume in this specific stream, but for me it's been price action. There's some other older streams if you want to check them out where I talk about price action and patterns. Maybe I can pull one up for you. Actually, let's see if I can give you the actual episode if you want to know what I'm looking at. Give me just a moment as I pull it up. Fat cat. Let me just pull this up for you. It should be. Let's see. Let's talk about trading systems. Consistent. I think it's 8. Right here, 8. I do believe talks about. Let's talk about trading. Yeah, I believe in this episode I talk about what I'm looking at specifically. It's all price action based for the most part. I mean, I look at a depth of market, obviously. So price action, understanding ranges. The last episode's pretty good too, the new trader roadmap. So that's not an edge. What's not an edge? Are you coming in here to be a dickhead? Because if you want to be a dickhead, I will more than gladly fucking ban you. You know what? I think you're a dickhead. And you're going goodbye. Let me see. Let's get rid of you. I'm going to put you in timeout, actually. Look, if you're going to come here and you're going to tell me this bullshit and you have no idea what the fuck I've been doing, look, I stream for free every fucking day on Discord. You can sit here and listen to me trading. I fucking record all my fucking trades. There's fucking edge in what I'm fucking doing. All right? And I'm training another trader for free right now in order to have him do that edge as well. So if you're not fucking familiar with any of this bullshit and you're just going to come into a fucking stream, not gather any goddamn due diligence, you're a fucking idiot. So I'm going to put you in fucking timeout, sir. I'm just saying. It's fucking stupid, man. Little facetious fucking cocksuckers like that. All right. You didn't come here to learn. You came here to be a fucking dickhead. All right. So that guy's gone. Do I trade during the news? Trying to pass combine with Top Step. So you probably like to trade during news. I'll trade whenever. I'll trade FOMC. Let's see what this fucking guy's saying. Can you, sir, more talk about volume, please? Yeah, let me get back in the volume. Earl, I just recommend watching other streams and shit just to understand what I'm doing. So what we can see is our spoofing here. Let's go back to just, I'm going to just talk about this shit. Maybe that guy wasn't talking shit to me. He was talking shit to somebody else. Okay, so 14 lots here. That was what was not here. Then we have 7 here. That was what was not there. So in my opinion, the market makers who are making the market, bids and offers, right? It's averaging about 60 contracts, sort of, on the bid offer. So everybody knows about order flow. Everybody can see the order flow. They want to hide what they're doing in the order flow. So it's like the bid offer is always a certain level of thickness. But once you reach where the bid offer meets, the red and the blue, right? That's when some weird shit starts happening. That's when you start to get the reloading. That's when you get the spoofing. So it's this very last microsecond thing that is happening in order to mask what is happening in the order flow. It allows the smarter traders with more speed to mask what the fuck they're doing. Because, I mean, if you watched my How to Read a DOM video, the average thickness was about 300 to 400 lots. So it was very thick on the bid offer. Something happened during COVID. The liquidity disappeared, and it got really thin. The overall volume is still the same before we lost liquidity and after we lost liquidity. So what's happening is they're cutting the trades up more. And the bid offer is super fucking deceptive because shit is pulling, like we see here when a 7 and a 14 lot hit, when that's not what the hell was being advertised. So 750, 725. So 30 lots, 40, 48, 31. So you got 28 right here. You can see it pulling. 7. So like that. And as a retail trader, I'm only getting 20 screenshots per second. So you got to realize these fucking guys are trading on like a nanosecond now. I don't know what their minimum time is in ES. We know they can. We've known they can do microseconds. And there's quite a few microseconds in 1 second. So there's a lot of order flow events happening that your depth of market isn't going to capture because the screenshots on the depth of market are a lot slower than what is really happening in that bid offer. But we can still see the volume that actually came in. And we can see the volume that was actually there. So we can see them spoofing in this specific example. So there's a game being played where you can't really see what the fuck is real and what's not. Because as soon as that spread is getting hit, they're either going to reload, which is also manipulation in my opinion. So if we continue to watch this. So there's reloading going on in this region here. Let's see if it does it. That actually went up smooth, right? 37, 21, 29. But look what was there at this point in time. That fucking rhymes. Watched Happy Gilmore 2 yesterday, and it was fucking atrocious, by the way. So we're going to kind of pull this screenshot. Let's see what trades at these 3 levels. 8. So if we come in here, let me shrink this. Right. So you can see let's align it right here. So 37, what was being advertised was 59. 21, what was being advertised was 54. 29, what was being advertised, 58. And then at any given time, you start to see massive amounts of reload. So that's manipulation, in my opinion. That's one form of it. Then they start reloading right in here. Now, what you got to understand is, like, ES is super trappy. Like, you'll see, this is a 3-second. Notice how, like, let me pan this over to the left and right. We're going to get into it if you guys just pay attention. Let's pan this over. Notice how that the market is staying to the tick here. And it does it here as well. Let me pan this back over. So notice how nothing is hitting up here. Let's see if they do. 4 lot hits. So what oftentimes you'll see is they'll start tweaking up and down on one price. And this, let's see if we can get an example of them actually doing it. Right here. And then I'm clearing the order. Let's see if we can see them doing it somewhere. So right here, so 16 contracts boosted it up. And then 16 are hitting here. So if there's a seller here, what they could do is they could work the limit to cut their order up. And as soon as it tweaks up, they market order buy, or sell, I should say. So they're working the limit right here. They're reloading. So they got 16 in on the offer. And then what they can do is they can market order buy and add, or market order sell in this specific example, and add more. And what you'll see is the price action often tweaks where, like, if you look at a small time frame, the price action is super flat. And it looks like the offer might be holding, but a lot of times that's not what's happening. It'll go up bid, but then somebody immediately scoops that. So this is a great way to cut up an order, is when the bid offer is just tweaking on one price up and down like this, sit on the offer, get a little bit in, and as soon as it goes bid, you sell more at market order. So you're getting in at the same price, but you're working a limit and a market at the same time at the price, so it starts tweaking up and down. Now, see, that went up on 27, but that's not what's being advertised. Let's see if we can see some stout reloading somewhere. I think there's some stout reloading somewhere here. And you guys should be familiar with reloading. So what will happen, and it's kind of tweaking up and down, you'll just see them iceberging it, and then a bunch of market orders start hitting, and this just starts reloading. However, if we kind of like look at the price action here, it's sort of tweaking up and down. Right here, right? And this area would be a great method where you limit order sell. As soon as it goes up a tick, you can market order sell. It goes down, you can work the limit. It goes up. That's a great way to cut up orders. If I was to do it that way, I mean, that's just absolutely excellent. However, when they're reloading, that is market manipulation. Let's see if we can see a good reload here. See, they're kind of doing it right here, actually. I know somebody gave me a hotkey on how to rewind it better. So let's watch this 875. Unfortunately, I don't clear it. But notice how it's like tweaking up and down. See, they're reloading, reloading, reloading. And then as it goes up, they just fucking selling it back into 875. So it's like doing this up, down sort of weird little bullshit, right? See how they're doing it? Up, down, up, down. And it's really moving on not shit. I mean, fuck, a 14 lot was here, a 17 was here. So all this 50 and 60s you're seeing, like half of that is fucking bullshit. So you'll hit these pockets and it's like, are they going to fucking hold it or is it going to like go up on nothing? And then in here they're starting to tweak it up and down, cutting the orders up. Because when these guys are moving large amounts of orders, they got to cut it up. They have to. And in Anna's book, she talks about how the market makers get into a position. Anna Cooling's book on volume price analysis, that's the whole point of this chat, is I want to talk about what I've learned from it, because I went through the book twice, and I went through chapters 1 and 2 a fuckload of times, because those are really interesting, and the way she talks about the manipulation. So let me show you why I actually got long here. Okay? Notice this massive divergence. So when we look at the delta, I wanted to look at, her book is mostly on volume histograms. So her book is going to be like just good old traditional. Let me pull up Sierra charts so I can go over it real quick. Okay. So we'll do F6, and then we'll unhide this, and then we'll hide this. So her book is really about reading histograms, and I have a video on every course I ever taken, and I talk about a volume analysis book in my early trading career by Mark Lavoyet. And Anna's book sort of just showed up in a Reddit post, so I decided to go through that, and it was also volume price analysis, and it's mostly about these histograms down here. And as I said earlier in the stream, as I'm like combing through a 1 second chart, I can kind of see it on a 3 second chart. Let's see if I can, let's go to when the market was actually open, right? Might be harder to see here. So we'll do this. Okay. So again, I would get like various, is more prominent on a 1 second chart. You would get a lot of like these volume spikes, but the bars would be roughly the same size and shit. And then when the market would actually like go down or up, it was like kind of drifting on not fucking shit. So I'm looking at it because her book is talking about the price bars versus the volume bars should be roughly about the same size. For example, notice this large sell bar. Let me put a crosshair on it, right? See this sell bar right here? Look how big the volume is. Now look at this buy bar. It had shitload more buying in it overall, but the bar is smaller. And if you look and you start comparing bars that are roughly the same size, you'll see various volume in them. These two are roughly the same. Let's see here. Where's two bars that look almost identical in size? Probably this one and this are almost similar. Notice how it has a lot more buying pressure on this bar up here Look how much lower the selling pressure is, yet this bar is almost, it's about a tick less, but it's almost as big. And as we saw in the DOM, we saw them spoofing. We saw it clear a 7 lot, a 14 lot. So there's a combination of them doing that as well as reloading, and it is fucking relentless. So when you take a lot of the lessons in the book, rising volume should be on rising price. Rising volume should also have price dumping. So you should see this going up as the price is dumping, right? Like right here. It kind of dumps on a spike, and then you should see rising volume as it goes down. So that's good. That's telling us that it's not really abnormal. That's what should be happening. But if you're seeing these like hard moves and the volume is decreasing, something's going on. And what's most likely happening is they're spoofing a bit to drag it up, to test to see if there's bids or offers. So this is where it's going to kind of get, it's going to start to get more interesting. Trust me, you got to follow along with me here. So the market makers are always balancing their books, right? They're working the bid offer spread. They're trying to pick up a tick or two. If you listen to chapter 2 or read chapter 2 in her book, she gives a story about her uncle who has a widget company, and he makes a small profit buying and selling widgets. So he wanted to make more money. And what he did was he created artificial scarcity, and a bunch of people started buying. And they bought so much that he didn't have enough stock in the warehouse. So now he needed to convince people to sell back to him to balance the book. The market makers, they are obligated to make a market. So they're always going to be working those limit orders. But sometimes you get a really big blowout, right? A really big move. And they're always scalping in between the spreads and shit. But the thing is, overall, their inventory might be offset. And this kind of goes to a Wyckoff principle with accumulation and distribution. After a large move, there's usually going to be a consolidated area. That allows them to rebalance their books or rebalance the warehouse after that large move up. So they're able to kind of play the spread, keep it in a consolidated area, and sort of like offset them being in a negative, you know, having a negative profit if the market ripped up and they were just kind of selling into that, leaving offers, and they keep getting hit. They're losing every time it goes up, and those offers are getting hit. So once they go through the accumulation phase or the distribution phase, they're able to sort of just scalp their way out. I have a video called Bankrolling. It's an older video, but it's pretty solid. It's a methodology that I use. Chronic uses, who's my prop trader that I'm training. And he's onto this shit as well, which the way we're looking at the volume right now, it has improved his trading. So, you know, I want to share this. Let me just read what you guys are saying here. Do you think it's still possible only to trade with a DOM and no charts? Nah, it's too hard. I need to, once we start talking more about Delta in this, you'll see why. I need charts. It's too hard to keep track of when they're reloading and when they're spoofing, because on the bars, if the volume's not matching the bar height, you can see when they are reloading an outsized position. For example, let me actually pull it up. This trade here where I'm long, look at the selling pressure. So with the delta, what you got to understand with the delta is it's buy orders minus sell orders. This is a continuation of what I was originally talking about. And this is why I think charts are important. For one, price action, to identify ranges and shit, channels, all that. Price action has always worked for me. It's too hard to know where there's a shitload of reloading and if there's a position being built on a DOM because the numbers are just coming in and it just like fucks with your head. And I think that's why that happens. I think that's why they spoof and reload. It's just really hard to gauge if somebody's actively building a position. Whereas if you look here, there was substantially more selling, and look how flat the price is. But this is also a slip range too, by the way. So this is like, I have a video on slips and reclaims. So I like that type of price action. You can see how loose it is here, here, pretty loose here. It's getting these hardcore like moves where it's just like it's dumping, 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 ripping, dumping, ripping, dumping. It's in a slip range, so it's very mean reverty. So I do like that. But man, they were fucking selling hard. But what's happening is it was getting reloaded. There is clearly a big-ass buyer in there. And I believe when I got into this one, it only won against me a tick. So this one was pretty good. I couldn't get a full fill. I'd get out up here, and then some of it comes back, and then I exit the rest for a point. I think I get a little bit out at 1075, but it wouldn't fill all of it. And then I had to pull the rest for a point because it was kind of coming in. But to know when they're doing this is really difficult on a DOM. So what's interesting is kind of going back to what I was saying. I was looking at the volume on a 1 second with the histograms. I'm like, this shit is not making sense because on a 1 second, especially on a 1 second chart, 3 second, all that is kind of hard to tell. But on a 1 second chart, you get these massive volume spikes. And it's like the price would not move but a tick or two. And then the same thing would happen on less volume. So I'm like, man, there's like, obviously they reload and all that shit, but I'm like, there is something going on that a lot of what Anna talks about in her book, it's really fucking difficult to see it with the volume histogram in a traditional sense. So what I wanted to do was look at volume from a candlestick perspective. I'm not that great with Sierra charts, so the traditional volume histogram, you can't make it into a candlestick sort of thing where you can see the volume being added up or whatever. It's just easier on the eyes to see it like this, candlestick form. And really, if you think about it, a cumulative delta is actually exactly the same thing as normal volume. There really is no difference. Just like on the DOM, this in here is the same information that you get on a footprint chart. And then when you add it together, it's the same information you get on a volume profile. So it's very similar. With the delta, we see them trading into each other all the time, right? It tweaks up and down, and then you see it just kind of barcoding is what Chronic and I call it. When it like, especially on these small time frames, it like goes flat forever and it's just like moving in this 2-3 tick area. It's barcoding, and it gets all these flat tops. Like it'll go bid, but then not a one lot will hit, and then they immediately scoop it up. So the way they're cutting the fucking orders up and heightening it and shit creates this like barcoding effect on the price action, which is affecting all the higher time frame shit. I think there's wash trading going on. The market makers are incentivized to bring volume in. What's interesting is in futures, from what I'm seeing, they don't get paid rebates. All they do is get paid, all they do is get discounts on round turns, the more volume they do. So market makers don't get rebates on break-evens, or certain markets they get paid to take, certain markets they get paid to make. So certain markets they get paid to actually be a market order, not a limit. And it's talked about in Flash Boys, actually, which is interesting. So it seems like there's a lot of like wash trading going on. They need to stimulate volume. The exchanges want volume because the exchanges, you know, they make money when there's volume. Obviously, they want more fucking volume. Market makers stimulate volume by doing the bullshit where you fucking see them pulling a little bit, right? When we saw that 7 and 14. My theory with that is that quick push on no contracts, right? The bid offer was not that thick. A 7 and a 14 come in. It goes up 2 ticks. What that's doing is that's stimulating emotions in participants. It's stimulating FOMO or fear, depending on what side of that you're on. So you might jump in. And I've talked to a lot of traders, and we all of us suffer from fucking FOMO, where we're like, oh, it's going, and then all of a sudden it dumps. What's probably happening is I think they spoof them. Not always. Sometimes they're not spoofing it, and we just nab the top of a fucking spike or some shit. I think they spoof it like that, and it's on such little contracts that I think it's a way to not flag an investigation from the governing body, right? Apparently, for the longest time in the book, Anna talks about how the SEC didn't, the CTIFC, I think, is who governs futures, but as far as SEC goes, they didn't really govern market makers. They were a self-regulatory body. So they get away with manipulation to stimulate volume. I mean, it's all fucking manipulate. There's so many aspects of it, like fucking the politicians who are doing insider trading and shit. If you're a market maker and you can really truly see the supply and demand, you're gonna fucking manipulate it. That's edge. So what I'm thinking they're doing, at least in futures, is they spoof it a little bit to just stimulate some volume. Because sometimes they're trying to get out of a position. Maybe they need to get a short filled, so they kind of pull to attract real volume to then fill their sell order. And then they pull the other way to fill the spread. You know what I mean? So they kind of start spoofing it and shit. I feel like there's wash trading. I've talked about it a lot. It's where you trade into yourself. But if you trade small enough, it's not going to really trigger an investigation. But also, how do you prove some of this shit in fucking court? You got to understand these big firms have lawyers, and these lawyers know how to fucking ride that gray line. Have the firm ride the gray line. However, they can't hide what they're totally doing. And what I like about the delta, it's buy orders minus sell orders. So when they're doing all that wash trading shit, and there's all this reloading or this spoofing or some shit, you can see it in the delta, because what it's doing is it's getting rid of those break-even orders. So you have 10 lots come in, then another 10 lots come in on the other side. They sort of cancel each other out. So the delta is not going to move up or down. But then you have another 5-lot buy come in. So the delta would be a little bit green and the price would go up. Or if it's a little bit green and the price doesn't go up and it just stays flat, then that's telling you somebody's reloading. And if you were to take actual volume, not cumulative delta volume, where it's buy orders minus sell orders, I believe it would look exactly the same as what you see here. Because your buy orders and your sell orders would start to cancel each other out, and whatever's left is going to make this candle happen. So we can see that there's a bunch of sell orders here. Obviously, a lot of volume could have came in, right? And that's kind of where it fucks with the histogram. You'll see the rising volume coming in. But is a lot of that like, you know, is it most of it like, let's say it's 200 by 300, buy versus sell? Well, only 100 of that was actually meaningful, because the rest of it sort of canceled each other out. So only 100 of that really mattered. Whereas on a volume histogram, the price is going to keep going up, right? The volume histogram itself is going to keep going up every time volume's coming in. But to me, it really seems like there's some form of wash trading where it's buying and selling coming in, but it's almost like it's break even to stimulate volume. So all of a sudden it tracks real volume, and it really isn't that much, and then it pops up. So that's where I think looking at it from a candlestick perspective is more useful, because especially here you can see how much selling came in. Like from the start of it, it was at 800, and then it went down to, let's just call it 400, right? Negative 400. So 400 plus this 800, the total amount of volume that came in there would be what? 1,200. So there was about 1,200 contracts overall that sold in this area, but the price remained flat for the most part. So somebody was reloading. They were also doing it on this buy side as well. Notice how the buy side rips up, and it goes from what, 1,000 to 1,400. So about 400 contracts come in. But notice how the price is relatively flat compared to the delta in this specific area. So more buying came in, price remained flat. So what's happening is they aggressively reloaded on the sell side. They reloaded 400 lots, the sellers did. 400 market orders came in, and the price stayed down. So they're reloading in that area. They're holding it. And obviously, the market makers, they don't give a shit. They don't give a fuck about where the price goes. It's all about balancing their inventory. So as it comes down, they can hold it down here and work the bid, and then a bunch of selling comes in, and that, they could have got 400 lots filled here. Bunch of selling comes in, and then they work the bid, and then they make sort of that spread, right? Now, I believe they're always campaigning, so they're obligated. They are obligated to make a market, so there's points where their positions are going to get pushed, and they're definitely going to be in a loss, but due to that buying and selling aggressively, they might start reloading in one area more than another and then kind of spoof just a little bit. I noticed their spoofs are very subtle. They spoof just a little bit just to stimulate a little bit of volume. And that's how they can kind of get in and out of positions and work it. And certain positions where if the market really trends, they're going to be offset pretty bad, where the warehouse either has too much inventory or not enough. Basically, are they losing money on this position? It's kind of like the Beanie Baby craze in the 90s. I grew up in the 90s and Beanie Babies exploded. What's crazy, if you watch a documentary on that, because these fucking things would go for hundreds of fucking dollars depending on what it was. The Beanie Baby manufacturer, they accidentally created they accidentally created scarcity, and they realized they could exploit it by making these limited run Beanie Babies or some bullshit. And you tell it to the news, and then everybody hears about it, and then there's all this panic buying. And people really do operate on greed and fear. I remember the GameStop AMC thing. I was trading around then. Dude, I went to a family reunion, and people were talking about buying GameStop at that time. People who family members opening Robinhood accounts. People in their 60s and shit. And they're just buying this. And it's you have no business trading, and it's just you heard it on the news, so now you're doing it. So it does work. There's also an interview with Cramer. Yes, that Cramer. Jim Cramer. Back in 2006. And he's talking about when he was at a hedge fund, how they would manipulate the market, how they would push puff pieces into the news or whatever to actually stimulate the market with manipulation. If you had enough money, you needed to hold the market in a certain place, so you start reloading in certain areas. It's very interesting. And in my opinion, it is a lot fucking easier to see the reloading or the spoofing with delta bars to better gauge what's going on versus a DOM. Now, I think the DOM is useful because, knowing the queue of your position and just executing on it and then doing snapshotting, which I talked in a prior stream. But what's interesting is the delta is just an easier way, in my opinion, to really keep track of where they're reloading and where they're spoofing. And what's really interesting about ES is when you look at it, both sides are really, it's manipulated almost all the time. There are these brief moments in time where the volume matches the price movement. Okay? There are these moments where the volume matches the price movements. But that's very rare. So most of the time it is being manipulated in some way, whether it's the subtle spoofing or the reloading. Obviously, anybody who's looked at a DOM knows how much reloading, but just by how much. They're obviously trying to hide what they're doing, but since futures is super transparent, we don't have dark pools, all that bullshit, all the volume's coming in. This is an example. Now, the thing is, when it pops up, and let's say the volume starts ripping up, they might start just reloading heavily on the sell side right here as well. So just because you see this hardcore divergence doesn't mean that you're not going to run into fucking problems on the top side when you're in the trade. They could start fucking reloading that top side. And in the end, the market makers are just trying to pick up the spread. So that's something to be aware of. And when you really look at, let's pull it up. Let's pull up Sierra charts. Let's do like a 30-second or some shit. Well, that's interesting. Wait, is this the right product? It is. So let's go to kind of in the morning when I was trading. So massive amounts of divergence on the downside, right? Price moves up. That was sort of the trade we were looking at. But at the same time, like the tick for tick is not all that great. Like, look how small this will zoom in right here. Right here especially. So look at this doji looking deal. Look how small the buying volume was. Right? Let me make sure that, yep. Look behind it. Notice how tall this bar is. Volume is roughly the same. So obviously there's some sort of reloading or some shit goes on. Big ass volume spike. Price goes up. This volume and this move look similar, so that would be somewhat natural, although you get a bigger wick up here. Then you have slightly more buying in here, yet this bar closes on the sell side, which is interesting. Right here. See how that's green, that's red? We can see how many contracts actually came in right there as well. It's probably not much either. Like, it's interesting because when you start to really look at these moves, it's kind of going up on not much in certain areas. You would think it's like thousands of lots, but then when you kind of get rid of that whole wash trading effect, and that's the thing, I was pursuing this some time ago. Jigsaw has these power meters where it's buy, sell orders. And I would notice, this is another thing too. This is another thing what I'm really noticing. The buy, sell orders, market orders that would come in on the power meter, they would almost always be close to even. And then I started looking at 1 lots, 2 lots, 3 lots, and I would filter my tapes all the way up to 50 lots. So 1 lot tape, 2 lot tape, 3 lot tape, 4 lot tape, 5 lot tape. And then I would run the power meters. And I would notice that most of the time the market orders would be roughly even. The same amount of buying and selling would almost always come in. And I'm like, man, this is fucking strange. I swear to fuck, they're wash trading. And I was trying to figure a way to kind of get rid of the wash trading. Is there a way to see the volume and get rid of that back and forth? And then I realized, oh, fuck, Delta actually does that. Duh. And I've looked at it for years, and I never really caught on to it. I remember making a video years ago, and I kind of talked shit about Delta. I'm like, sometimes it goes up and the price goes down, but sometimes it goes... Little did I know about manipulation at the time, right? So right here, you can see that the bar opened here, popped up, closed down here, went down, closed right here for about a tick. Yet this is offset. So you have, let's make it, so you have this green delta. You have 1826, 1834, so 34. You do the math, 34, hold on. 34 minus, god damn it. 34 minus, what was it? 34 minus about 25 or whatever. It might be off. So only a nine lot buys came in right here. So out of all the bullshit that happened up here, 9 contracts. And this is a 30-second time frame. So within this 30-second time frame, yeah, it initially bumped up by quite a bit, came back down. But once you kind of like get rid of everything, only 9 contracts on the buy side are sort of left in this 30-second period. Yet we're down a tick from where we kind of opened, right? So that's due to the nature of the reloading and potentially spoofing. Because if we really look at how many contracts did cycle through here, 1923 by 23. 1923 minus 1811. So about 121 contracts came through on this from the low to the high. But another 121 something came in, and all we were left with at that point in time was fucking 9 contracts on the buy side, but the bar closed on the sell side, right? 9 lots buy were left. Out of the 120 something contracts that came in, then came right back out, we're left with fucking 9 lots on the buy side, yet this bar closes a tick low. That just kind of goes to show you the manipulation to it, and it's just a lot easier to see from this perspective. Now, I'll start looking at the chat. But what I noticed, and I've noticed this a few years back, is if you guys aren't familiar with my reclaims and slips video, I would go watch that. So typically when you have a hard move in the price action up here, they typically retrace it at some point. What I noticed a few years back, I was looking at Delta. I noticed they would reclaim the Delta too. So you would get these hard moves in the Delta like this, and they would retrace it. And that's when Anna's book, look, dump, retrace. You see it here as well. They didn't actually retrace this volume, which is interesting. They don't always do it. It doesn't always get completely fucking retraced. But, like, look, on the volume, rip up, rip down. On the volume, they do it in the price. Oops. Let's... Oh, you know what I have? I have this... where is it? Let's put it on independent. Let me take this off... take it off right here. Wanted to look at this one little volume. Yeah, right here in this section. But here you go. Rising volume, rising price. That's what you'd want to see. Right. This is also rising volume. If you were to look at it in a histogram from Anna's perspective, the selling is going up. So if you were to look at that selling on a histogram, it should be going up. The price is also going with it. So the market is actually not being horribly manipulated in this section. But the volume is the volume also hits reclaims as well. And I began to think about this. And if we look at the bid and offer, if none of the spoofing happened, none of the reloading happened, whatever was there, right? It wasn't so aggressive like it is today. In 2025, those volume bars would be the same size as the price bars. Because whatever's there, right? If there's a 10 lot, 10 lot, 10 lot, 10 lot on 4 different ticks, and there wasn't all this reloading and spoofing, then the market would take 10 lots to go up 1 tick, 10 lots to go up another tick, 10 lots to go up another tick, and 10 lots to go up the final. So therefore, the bar to bar ratio would be exactly the same. But since you have all this reloading and spoofing, it starts to deviate the volume from the actual price action. And then you can start to see where the true reloading is. Now they're doing it on both sides. I've said this a lot. I think they fuck both sides in the ESE Mini. This is why I like to scalp. Because it is very difficult to hold positions in the ES without it just relentlessly coming back to your entry. And it's a lot easier to predict the next few seconds than the next several minutes in the ES, at least for me. Just scalping, there's times where I'll get into a more aggressive trade assuming the price action on different time frames, and there's a lot of shit aligning. But I think they're fucking both sides, and Anna talks about how they do shake both sides in the book. It's like a tree, right? You got some fruits on the tree. You're going to fucking shake the tree, and some of the heavier, weighty fruits are going to fall off. So that's going to be your really skittish traders who are like really honed in on the fucking order flow on the DOM, and they're getting in and out really quickly. It takes just a little bit of shaking to get those guys out. But then there's going to be guys who are a little more stubborn, some of you who like to try to hold for, an hour or two. That requires more shaking of the tree to get more of the fruits out. So what they're doing is just shaking the absolute fuck out of the tree on both sides to get all the fruits out, refilling their inventory, their warehouse. Then they're going to make a decision on whether we price explore or not, because it can take, Jim Cramer says it in that interview. I would watch it. Just put in Jim Cramer market manipulation. Let me actually pull it up. It is very interesting. Let me put it in here. Jim Cramer market manipulation. It's from 2006. Yep, it's like the first video. Jim Cramer explaining the basics of stock market manipulation. Which is interesting. Obviously, he's a very shady individual, but what he explains is very interesting. And it makes sense on how these tactics would actually be fucking employed in real life and shit. But what I noticed, again, this is kind of where it all started clicking, because I was cycling through Anna's book, the first 2 chapters, a lot. Just like I wanted to savor every word she was saying. And they got to balance their inventory. They got to balance the book. They can't have too much supply. They can't have too much demand. And if there's a big rally, they're going to be offset a bit, right? What's interesting is if we look at this, I believe them reclaiming the delta reclaims, is the inventory rebalancing. If we go to a 30-minute, and we kind of zoom out a little bit. So the way I have the delta on this is I don't want the actual delta to restart at the beginning of the trading session. I want that delta, I want those orders to be like stacked up. What's interesting on this 30-minute, look how range bound the overall delta is, the buying and selling. Yet you get this market drift. And this is an interesting area as well right here. Look at this just selling. Now, a lot of these giant spikes are going to be your mocks, your market order on close, that last 10 minutes when all that fucking volume's coming in. But look how, like, for days it dumped in. Price isn't going anywhere, so there's a lot of reloading on the buy side. And what happened? The price ended up drifting up. So they're working on multiple time frames, and Anna talks about it. So certain time frames are going to be in more trouble than other time frames. They're always campaigning in and out of the position. Bigger traders tend to do this. I know Merritt does this. You put on your core position, and then you're always scalping around it. That's essentially what they're doing. But look at the reclaiming and the volume. Look how they're taking a lot of these moves back. It's like, and it kind of goes back to what I was experiencing when I was looking at all the individual tapes. I'm like, why the fuck are the market orders almost always balanced? Part of me feels like there's wash trading, for sure. And they do it just enough to not trigger an investigation. Also, you got to think, the people on the investigation, the fucking government agency that investigates this shit, somebody might be slipping them or, like, lobby them or slip them some hush money. I mean, it kind of, if you're rich enough, you can pretty much get away with shit regular people can't get away with. We all know this, right? So what I notice is I'm like, dude, they're always reclaiming the fucking delta. That delta is always being reclaimed. And what I think is happening, and another reason I think there's wash trading going on is when you look at odd lots, like 11 lots, like usually people trade like, fives or some shit, fives, tens. When you look at weird sizes on a time and sales, they're always coming in and out. And it's most likely the same person or machine that's doing that. Like, you'll see these 11 lots come in and out. And it's like, there's not that many fucking traders that are probably trading 11 lots like that. Something obviously happened with the liquidity because it's thinned out drastically since COVID. Apparently, it's been thinning out over the fucking decades. I heard in 2012 it was up to 1,500. Almost probably look close to like 10 years. So the ES used to be super thick. But due to the algorithms and the HFTs and the front running, spoofing became a thing, right? Spoofing was developed. Paul Rotter, the flipper, if you've never heard of him, he would spoof, put in a large bid, right? And the algorithms the HFTs would try to front run him, but he would be on the other side absorbing it with an iceberg. And then he'd pull that bid and dump the market, and then all those algorithm or those HFT orders would start stopping out, and he would get a move. Obviously, it's illegal, but that's what it was used to counter HFT front running. And we're kind of in this day and age with all this technology and these computers where they're fighting each other, because they are fighting each other, that they're starting to get more and more deceptive. They're hiding more shit. They're cutting their orders up a lot more aggressively. You're getting these weird little spoofs happening to kind of trigger FOMO or some shit like that. But with the delta, they're always balancing their fucking books. They're always balancing their inventory. That's why I think the delta gets reclaimed the way it does. And the way I've been using it, that's been working really fucking good right now, is leaning into those delta reclaims. Now, there's times where there was a trade today where I got short. Let me actually pull it up. Let me pull it up. It's one of these. I want to see the screenshot of it. Maybe it is this one. Or the trade before. Give me a moment. Yep, it's this one. So there, notice there's a giant reclaim on the delta right here. I'm short right here on 750. So they're starting to break. Yes, there's a reclaim to the upside as well, so I did have a bit of backside risk. But I'm like, all right, I'm anticipating them running through this to rebalance this offset buying, because that's a lot of buying. They're probably going to run through it. Like, look, see this giant sell? There's giant buy that just fucking reclaimed it. So the market orders are reclaiming, and if you look at the fucking bars here, the reloading is what causes the delta to skew. And in my opinion, the delta, if we didn't have, again, as I'm saying, just bear with me. I know I'm stumbling through this shit, but this is working really well for me, and it's working really well for Chronic, and not that many of you are actually going to fucking take anything away from this. Maybe like one fucking guy or some shit. But the balancing of the fucking book, man, it's like they balance the fucking market orders. The market orders get balanced. And it's just like, it's amazing how like all these little fucking things I've been seeing over the years is starting to come together and make sense, because I'm like, what the fuck is going on? Some of you might remember my order flow videos, like order flow is bullshit type videos. I think the DOM's useful, but I was just explaining the manipulation. Now I'm starting to like see what they're fucking doing, because it's easier to see it from a delta perspective, which blows my mind because I've had it up for fucking years and years, and I could just never see it in the delta. But then again, people put up order flow and aren't actually reading it. Like, there are people who put up DOMs and they're not reading the fucking numbers as they're coming through. It's just kind of like there. You know what I mean? So I'm anticipating in this area they're going to go through this reclaim, right? See how it's mostly buying. And then what happens is I'm sitting in this position. They start to go down into it. Notice how that blue is being pushed into, but the price isn't moving. And I'm still here at 750, and you can see I'm like getting ready to exit at 750. So I sat in it and just selling. And what they'll do is they'll balance the reclaims on the delta. And it's funny because that's like a price action fucking principle that I've leaned into heavily for a long time. That is really a core thing to my trading, is reclaims. And slips are basically the same thing. And it works on the delta, and I never knew why, and now I'm starting to understand what's going on. They're balancing inventory. The market makers are balancing inventory when that is happening. Something is happening where there is some form of fucking balance going on, whether it's wash trading or something else, to stimulate volume, because that's what the exchanges want, right? And I'm sitting in this fucking trade, and there are times where you can go into the delta reclaims. You got to be careful because there's a lot of nuance to it, and it's not like as simple as like, oh, there's that. Let me get into it. I want to time a 30-second reclaim with like a 3-second reclaim to really get into it really well. And that it has been working really well coming in. So that's sort of my little speech on volume, something I've been wanting to talk about as I've been going through this book the second time, and then cycled the first 2 chapters multiple times relentlessly, because like a lot of the later chapters are like candles and volume to candle size, dojis, shooting stars, and all that shit, and I noticed a lot of that wasn't working too well in the ES. And the reason is most of the time it's being manipulated. Most of the time they're fucking reloading or spoofing. So most of the time the order flow is just it's fucked with. So therefore, like, most of the time it's completely fucking manipulated. Let me see what you guys are saying real quick. Let's see. Sorry I missed that. What was the book? Anna Cooling. The VIX tapped 17 today. Hopefully we'll continue back up to 20. I'll definitely say that volatility is a blessing from the good Lord in trading heaven, because a lot of my trades are picking up points. That's a point. That's just about 2 points. This is today. Yesterday, a point. Break even, a point. 2 ticks, a point. Break even. This one's bigger. Let's see what happened on Friday. That one's a bigger one. Minus a tick, a point. Minus 5 ticks, a point. What, 9, 10 or so right there, a point. It adds up. A tick. What is that, like 7 or so? A tick. That's about 7 or so. So I'm like under 2 points most of the time. And when there's volume, it's so much better. I can get about 8 to 12 ticks, so 2 to 3 points more. But it just ain't fucking worth pushing it. Just scalping adds up too, and ES is just so choppy. So yeah, it would be nice if we got VIX 20. It really would be. Let me see. What's up, Ryan? Does that make the book more of a trap misleading than helpful? Seems like the CVD candles or footprint are better now because you actually see them. She actually talks about Delta in the book briefly. It was written in 2012, and I don't think it's misleading by any stretch of the imagination. I thought the book would be outdated. I think it was written in a time where there was less manipulation. Now it's very fucking manipulated. Virtually every fucking tick is fucked with. But I think definitely the first 2 chapters are worth it because she's talking about shit that had historically happened and using multiple sources. Charles Dow, Richard Wyckoff, Richard Ney. And there's a lot of talk about manipulation way the fuck back then, too. And the insiders. Back in the 60s and 70s, somebody was talking about it. it was being talked about all the way back in the 1930s and shit, and they were talking about the specialists, the market makers. All the way back then, they were talking about the manipulation that was happening with the market makers the fuck back then. And they talk about how there's nothing new in trading, and they can't really hide what they're doing in the volume. I think from a volume histogram standpoint, they are able to hide what's happening from that perspective because of the fucking wash trading. Whether it's wash trading or not, if you're watching the fucking DOM, let's get a good let's look at the actual open here. Is this the open? Let's look right on the open. Oh, this is a different day. Let's actually go to today. Just to kind of give it a good example. I was looking at stocks delta too. So let's go to the open. So I'm like sitting here kind of prepped. Because it's 8:28 at this point. Oh, I'm not pulling. I don't have the screen up. And then let's watch the open. So clear the inside column. Let me zoom it in. I sit here and do like nothing right off the rip. But look, 198 by 124, right? Look how much of it is trading with each other, and it kind of is like fucked up. Like it almost always looks almost even. So I mean, hypothetically, you could look at it from a staggered perspective. I'm looking at the price as well. Let's do this. It just depends on how you want to fucking look at it. And I never really thought about it at this point in time. But if you really look at it, you got what? So 151 minus 143. I know I can't do math. That's 8. So between them hitting each other right here, the difference was 8. So it kind of went down on an 8 lot. And then between 334 and 264, so I know somebody already has figured this out. 70. Between 198 and 214, obviously more on the buy side. Little more on the buy side here. So it's like you just have all this aggressive back and forth, and I just think it's a fucking illusion. I've been saying it for a long fucking time, but if we continue to watch this, even when you look at it from price to price, it's almost even, like 84 by 75. This is a little offset. Look how. Oops. I was looking at the stocks, which the stocks kind of do it too, but stocks are kind of goofy as well. Come on. Like 498, 578, 6. It's just when you really look at the volume coming in on this inside, which is like a footprint, it's very similar. It's very similar. I don't think the book is misleading. I think you just have to take it. I don't know. For me, it really... I mean, my trading has... it's gotten a little bit sharper. And I've only been looking at the Delta going on to 2 weeks now. This will be my second week at the end of the on Friday of really trying to comprehend what's going on and shit. But I had been looking at volume histogram for some time, and then I switched to the Delta because I don't like that rising and that falling and that rising and falling. I like seeing it in the candlestick perspective because you can really see, like, it's like taking the volume histogram and stacking the bars on top of each other. It's kind of what scalping is. That's why I like scalping so much. Like, you have a choppy move, but if you take the profits and you stack them on top of each other, it would have ended up making like a decent fucking move, right? Like, oh, a point, a point, a point, a point. And then you look at it, it's like, oh, you're up 20 ticks. But when you look at the price action, there was no clean 20 tick run because it was so choppy. So that's why I like the deltas. You keep adding them on top, where the volume histogram kind of does this shit. And she mentions delta in it and how it could be a useful tool, but that's not how she learned, right? And she learned in an era where the manipulation wasn't so fucked up. So I don't think the book is misleading. I think it's very interesting, and they can't hide what they're fucking doing. Obviously, we saw that one trade I got into where there was a lot of selling, but they were reloading on the buy side. You just kind of, a whale is kind of getting into a position at that point. Or the market makers, and they're just only going to get a little bit anyways. Because they're really fucking with both sides. So I don't think the book is at all bad. I mean, it's turned me on to this, and it has sharpened up my trading. I think that type of stuff really depends on your experience. I think when you read something when you're new and then you read it like 8 fucking years later, it just hits way different. Way fucking different. Like, I remember spending $1,000 on Gary Norton's 50-page PDF back in the day, and a lot of people talk shit about it, and it took me 3 hours to read, but for me it was just, I had been looking at the DOM and order flow for a couple of years at that point, so when I read it, everything made sense. Everything made sense, and for me it hit different. I don't know, it just depends on you and then what you see and if it resonates. Oh, thanks. Hello, chat. Let's see. You're great. So that's showing absorption. Can you explain a little bit about the market makers? I was under the impression that the orders were from all the market participants. It's funny because, like, in Anna's book, she's like, some people are going to think I'm a conspiracy theorist, but I swear I'm not. She says it in her book. I listened to the audio version read by her. She's an English woman. But just like everything I'm telling you kind of has a conspiracy theory vibe, she kind of went down that same rabbit hole, and I'm like, fuck. This is what I think too. The market, I mean, the market makers aren't going to really talk about, you thought it was everybody. I don't really know, man. I think a lot of the orders coming through are just fucking wash trading, where you buy and sell to yourself to create artificial volume. It happened in the NFT market. Remember when NFTs were big? Let's say I have an NFT and I sell it to my girlfriend for $100,000. That transaction is going to be recorded. Then she takes it and sells it to her daughter for $200,000. That transaction will be recorded. And then you're looking at this fucking thing and you're like, holy shit, it's going to the moon, right? It's every time it's transacted for $200,000. What we did was we just gave each other the money back. We just kind of pooled money to make artificial volume. So that $100,000 my girlfriend paid me for the NFT, I give the money back to her. But we created a record that there was a $100,000 transaction, and then she sells it to her daughter for $200,000, gives the money back, right? So no money actually really traded hands, but the transactions say otherwise. And then you come in and then you bid for it or whatever, and you get it for $75,000, and you're like, okay, it's sold for $200,000. I got it for $75,000. That's a good deal. Well, that's what wash trading is. We created artificial volume, artificial transactions, and you fell for it. I really encourage you to watch documentary, I don't know which one it is, on the Beanie Baby craze. Anna talks about the same thing, how market makers create artificial scarcity through manipulative tactics like this, because they're trying to buy at wholesale and they're trying to get you to buy and sell at retail. The Beanie Baby thing is interesting because they did the same fucking thing. They created artificial fucking demand. And it's very interesting. But how are the market makers? I think most of the volume is there's something fishy about it, and it's very, very, very evident on smaller time frames. It's not. Let me see if I can find a lull in the trading here. See if I can find. Okay, notice this. I clear. Let's see if it does it. See how only a one lot hits here and then it goes down? And it's just it's so meticulously staying in this area. And then only a one lot hits there. So what you'll notice is like the price action, and this isn't a very good example because the price action, it has some overlap. Let me actually show you, and it was closer to the morning too. Let me go to a smaller time frame. Do I still have my 1 second chart? I do. Well, it's overnight right now, so you'll see it get really flat. Let me reset this. You'll see the price action get super flat in a lot of areas like this. See how it's not even hitting a tick above or a tick below? It's like super duper flat, right? There's a lot of times in the ES where the price action is super flat. Like you don't have like this little slop where you have this little overlap. And you might be thinking, oh, it's just staying offer right there. No, actually it doesn't. Like if we zoom in on this, you'll see it go bid right here. And when it's bid, not even a one lot is hitting the offer. They immediately are hitting it back like I talked about earlier in this presentation. You use an order slicer to cut your order up. You work the offer. It ticks up. So you got filled on the offer. It ticks up. And the moment it ticks up, you market order sell. So you got in at exactly the same fucking price. You cut your order up. And then you go offer again. It gets filled. The bid comes in. And then you market order back onto that price. And it allows you to cut the order up. If there was a lot more retail present, and there's this good recent post on Reddit somebody put, it talks about retail accounts and shit and how much volume retail actually makes up in the markets, and it's like really fucking low. It's like super low. It can be like as low as 4% or some shit at times, and I think it goes up to like 10 or 9 maybe. Obviously 9% or 90% is algorithmically driven, right? So most of the volume coming in is not us, it's something else. And whatever else is coming in is a lot quicker and at doing this than we are. But you'll see it get flat, and you think the offer is holding. No, it'll go bid. It'll go bid here, and there's an offer up there, but not even a fucking one lot will hit up there. And I thought of this a long time ago. I'm like, why the fuck is that happening? I'm like, I don't think most of this volume, I don't think this volume is like, I think it's fucking bullshit. It's wash trading or something is not fucking right. You got to realize that I've been watching a DOM since, what, 2017? October 2017 is when I first got into looking at DOMs. I've watched the fucking landscape change a lot over the years. And the longer I watch it, the more I realize there is just something ain't fucking right with this shit. And everybody can see the DOM. They know we can see the DOM as retail traders. So it's being gamed. So, like, you get all these flat areas in the ES. And that is just, like, fucking weird. There's a video somebody did on market manipulation and got shared around. It's in the Discord. Let me see if I can find it, actually. This guy wrote a program and made his own, like, market. And there was a point where it started to barcode, where it started to go sideways like this. Yeah, there it is. It's this video right here. It's called The Manipulator's Sneaky Math to Beat Chaos. When he was doing the presentation, the price action died like you see here, where it'll just go sideways. And he's like, oh, I have to do something else to fix it. Otherwise, it just stays like this. I'm like, holy fuck. That's actually happening, though. Because he was trying to, I think, oh, no, that's not the right video. It was somebody else. My bad. That wasn't the video. It was by somebody who wanted to prove if price action patterns actually fucking worked. And he did prove price action patterns work. He wanted to know if it was bullshit. And then that's when he programmed the shit to trade with itself. And he was running into an issue early in his experimentations where it went sideways like this. But it's like ES is almost always doing this. Because I think they're wash trading and they're obviously spoofing. And then the reloading is also manipulation. So to me, it's almost, it's just my conspiracy theory. Either way, I'm able to trade around it, okay? That's the most important thing. We can have all these theories and shit, but can you trade around it and do well? Yes, for me at least. And I'm trying to get Chronic to trade well, and I'm hoping this helps him. And we're seeing some success with it because now he's starting to understand. And it's allowing me to just see where the reloading is happening more. But I feel like I feel like if this market didn't have all this algorithmic trading and shit, and it was just us trading, I think there would be these periods where it would just, like, nothing would be happening. And everybody's just kind of sitting there. I think the exchanges want them to stimulate volume. Exchanges want volume because they make money like that, right? I feel like this wash trading mechanic is always coming in. And it's like this game of hot potato. It's like somebody juggling or some fucking shit. And it's like, but it's all bullshit. Most of that is just kind of bullshit. It's an illusion. And I talked about it in my videos where I talk about order flows broken and shit. So that's sort of the way I see it. How are the market makers working? I was under the impression that orders were from all the market participants. I mean, market makers work the limits, so they're trying to make the spread. So they're working the bid, they're working the offer, and they're kind of banking on you using a market order to fill them, and then another market order to fill them on the other side. They're trying to pick up a tick. This is how it used to happen. Back in the day, you used to call somebody up to submit an order over the phone. Well, the guy you called up, he could see the real supply and demand. And he would middleman you. He would try to get, it's like, you ask your buddy for a bag of weed or some shit, right? And then he has to go to his guy to get the weed or whatever. And then your buddy charges you like an extra $5 or some shit. Right? He bought it for this amount, and then he he adds a little extra $5 on it, and then he gives it to you. That's what's happening. So they're working those limit orders. Market makers are making a market, so they're providing liquidity, which are the limit orders, and they're trying to make the one tick spread because the markets are so tight now. That's essentially what they're doing. Because if they didn't exist, if the market makers didn't exist, there would be no liquidity. And the market would be spready as fuck. Like, you see how tight ES is, like the bid offer are on top of each other. If you look at penny stocks or even Bitcoin futures, it's real spready. Like, there's bids and offers all over the place, but there's plenty of prices where there's no liquidity at all. Futures is super efficient in the sense that there is a limit order at every fucking price. For the most part, there are very brief moments where they spread. They spread more in NQ. Like, there will be some prices where they completely spoof and nothing traded and it jumps a tick on no volume. But if they didn't exist, it would be super spready. There would be several prices where nobody wanted it. And when you're hitting into the bid and offer, man, it's like if you were market ordering in or out, you would lose a lot more than a tick. And that's true in certain markets now. So they provide liquidity by making a market. They're creating liquidity. And the way they make it is through the bid offer spread. Which is interesting because there's this guy on YouTube who, in 2017, when Bitcoin was going up, he was doing like this arbitrage shit where he noticed, because Bitcoin changes on multiple exchanges, right? ES is just on CME exchange. And he noticed there would be a difference between the bids and the offers. Like, certain bids would be a lot lower on one exchange than another, and what he would do was he would come in and, pay for that or whatever, and then he would come in and offer on the other exchange. And since there was this huge price difference between the two exchanges, for example, one exchange is like $200 for Bitcoin. The other one would be like $190 or some shit. That's a big difference. So he'd get it for cheap on one exchange and sell it for more on the other exchange. Essentially, he was market making. And then that edge for him started to go away as more market makers started to fill those gaps in the price. And then it got arbitraged where all the exchanges roughly have the same bid offer. Is it possible to trade mean reversion types of strategies with just a DOM? I don't know. Maybe. If I don't do it, I can't tell you. I don't know. You don't use the VWAP, but have you used Brian Shannon's anchored VWAP? I have done anchored VWAP techniques. For me, it's like I can trade just fine without it. So I really don't know. I can't really give too much opinion on that. So what's the name of the volume indicator you have on the lower half of the chart? That would be, we'll press F6. That is going to be called, oops, that's the wrong fucking. It's cumulative delta bars / trades. Make it no. And then it's not a custom indicator. It comes with Sierra chart. So cumulative delta / trades. And then you can really see it reloading and shit. Cumulative volume delta. Let's see. Is there any specific setting for it to look like cat? Not really. It's pretty default. I just have it say no. Because when I'm looking at a 3-minute or a 30-minute, I want to see the delta, like, because they'll reset the delta at the beginning of the session. I don't want that. There's only 2 settings, and I only fuck with the one. Just no. So it should be the same. Okay, you guys have hashed it out. It's basically a gauge of pressure as it's delta based. If the delta breaks the swing but the price does not, then there's absorption. Correct. Holy shit. I'm trying to read through all this. But the delta does not, then it's exhaustion. Let's see. If we had real-time data on open interest like they have in crypto exchanges, we could have a better idea of real absorption. I think you would be correct. I've always would loved to know open interest, but we don't have that. I'm surprised you don't use the footprint because you study delta a lot. Well, the delta's a bit newer, and I have gone through my footprint phase. I don't like the footprint because it's... Well, I am using the footprint. It's really the same information on the inside column of the DOM. It's the same exact information that's coming in right here. Assuming I'm not posturing here. Like these market orders, it's the same thing, but it's just being cut up on a chart or however you want to do it. I don't like seeing that many fucking numbers. And like when you notice me getting in and out of trades, I'm like aggressively clearing those numbers because once old market orders come in, well, it either got reloaded or whatever. And as those numbers are stacking up, I get like dyslexic or something. And it's just like, it's too much that I want to keep clearing it and seeing fresh order flow. Maybe I could run a footprint on a smaller increment chart or some shit, but I don't know. Maybe I'll one day go back to it just like Delta, but I just don't see the need right now. Bro, I'm so confused. Don't know what to follow, where to start. Do you recommend Nadro, or should I actually learn? I feel DOM is too complicated, and it's too fast. Need very high focus. God, that's what sucks about trying to learn trading is there's so much fucking information, and it's like, how do you put it all together? How do you fucking start? I listened to a Markets Wizard interview yesterday, and Jack Schwager talked about the one thing all traders had in common in the Market Wizard books was they found something that fits them, their personalities. I like higher paced shit. I like the fast shit. I grew up on a lot of first-person shooter games, so I like that really quick in and out. It just resonates with my personality. I don't really know what to fucking tell you. You can go into my Discord for free and just listen to me talking about trading every fucking day for the most part. I did a hypnosis session with Chronic yesterday. Usually I do it with him privately, but I did a hypnosis session with the trader yesterday because he's getting a little worked up, and it totally brought him back to earth. Can always learn from me for free, ask questions. It's just, how involved do you want to get? Nadro, I don't really know. I don't scalp, or I don't trade the way Merit trades. So I can't really, it's good, but I modified the fuck out of it. Also depends on your modus operandi. Some people modify the fuck out of some shit. Because there are people who will go through courses and just absolutely butcher it and try to integrate shit in their system with it. That's what I did. That's just how I operate. I modify shit. Some people stick to the memo, or some people just completely innovate. It depends on who you are. It's going to be a lot of trial and error, man. It's a lot of looking at shit, it ain't going to get you consistent. I'll tell you that. No matter what material you go through, if it's not going to get you consistent. I have a fucking trader that I'm sitting here trading with. He has a job, but virtually every day I trade with this guy for goddamn half a year now. And his results are not my results. And you got to understand, like, I'm with him. But I'm also teaching him how to do it for himself. I'm not saying, hey, get in when I'm getting in. No. He needs to figure it out. There's just no way. Having the expectations a course is going to get you good, it's not going to fucking happen. It will not happen. It's experience. Tom Brady, really good quarterback. Love him, hate him. But if you sat there and coached with him every day for a year, chances are you're not going to be winning Super Bowls year or two. There's just something about raw fucking experience and just doing it. Recording and reviewing your sessions, you're going to learn a lot more recording and reviewing your trading than you really will material. But if you're trying to get something, you're trying to start, understand how the fucking markets function. You don't need to trade a DOM, but learning what is happening in that DOM is going to give you a better understanding of what game they're playing. Like I talked about in this entire presentation, the reloading, the spoofing, because that affects the price bars on every time frame up. So just having an understanding of why, at least that's my modus operandi. I have to know everything about everything. Some people just want super simple explanations. So I have no idea where you should start. Find shit that resonates, and you're going to go on a journey of, you just have to go through it, man. Like some of the material I learned when I was new, it all shaped my trading identity, but would I recommend certain things? At this point, my trading, not really, because I kind of just do my own fucking thing. I'm doing my own thing that is not like everybody else. Although there might be an essence or some inspiration from other traders in my trading. So it's hard to really like recommend shit if I'm not doing it. I really don't know what to tell you, which I know is frustrating. I don't think there is, go do this and you'll be good to go. I don't really fucking know what to tell you. Actually, I would watch my last stream, the roadmap for new traders. Because if you do the trader work, if you're really reviewing your sessions, you're going to get a lot from that. You've got to review your fucking sessions. And you got to be on top of your psychology, too. You really have to. Watch his last live stream. There you go. Oh, thanks for the tip. I appreciate it, sir. Dude, appreciate it. Let's see. I got smoked on the way down and no balls to buy the rip up. Yeah, I haven't looked at today, actually. I don't really know what happened after. Let's take a look. So they did puke it because I stepped out. So I'm assuming. Let's take a look. I'm assuming you got fucked up on this dump. That's why you guys are saying crazy fucking day. I'm assuming you got wackadoodled here because I traded just near the open. 3 minute. Look at the volume. Actually, I'd rather look at it on a 30-second. Here's what's interesting. So they look how it's dumping with the volume. So According to Anna's book, they could have accumulated a campaign, and then it just kind of went with the flow. Rising volume, that is rising volume, even though it looks like it's going down, and the price is working with it. Let's take a look here, though. Let's see. Obviously, I have something marked in this area. Let's see where the reloading starts to happen, though. Well, you can see it here, how it's kind of diverged in this section. So you're getting more selling pressure. And what's interesting right here, look at how it pops up. And this will happen, dude. Notice how, like, the volume didn't drastically increase right here, but the price fucking popped. Dude, I noticed that. When there's, like, a high amount of volatility, when there's high volatility, they thin the fucking limits out. They do. And you'll get these fucking kooky fucking pops where, like, what probably happened on this pop-up is, I don't really know. I'd have to look at a DOM because I was done at this point. I don't like to sit here all fucking day. That might have gone up on smaller offers. And it could have been like this little bit of spoofing that was happening to get it to fucking pop up like that. Because notice the volume is still down, but this is going up. Now, it did raise a little bit. There was a little bit of buying right in this section. This is when you kind of have to go at it like bar by bar. Let's actually fucking look at it. Because that's when it starts to tell you the story and shit. So the volume matches this bar. Bump, up, bump. Sell, sell kind of matches. Buy, buy, buy. There's some reloading there. Sell, sell. It actually may have gone up. Maybe it was on the way down or some shit. Actually, right. Here's where there's a little bit of selling, but this bar stays up. And then drastic buying, and then it gets kind of reloaded in that section. See how tall this bar is? This volume bar is? And these two price bars are roughly the same. Took more volume to get that to go up. It could have been some lightweight spoofing where, or it could have been like no spoofing. It could have went up on natural volume. I've noticed that there'll be like a fast move and like they don't reload and they don't spoof. Like it just moves on whatever the offers were. But either way, this volume did not get totally reclaimed. There's obviously some form of reloading on the low side here. You can see it here too. Like there's a lot more selling there, but notice how it starts to like the angle gets shallow right there. So the amount of selling here is already getting reloaded right in this section. So even though the volume looks roughly similar to the price bars here, this reloading in this section could have been what sort of skews it all. So this is the load, and you got smoked on it. I'm curious if we can see it before it dumps. I'd like to look at that. Then it's popping up. Now notice how you do have these reclaims. This is what I kind of go back to talking about it earlier. They tend to retrace these delta reclaims. And then it just starts fucking going to town, doesn't it? Except for that one didn't get retraced, but it's like price action reclaims. They don't always. I want to see what was happening. Can you see what was happening before it happened? Sometimes you can. Sometimes there's like weird volume events before the dump like kicks off. We were in a range. We were in a hardcore fucking range since the open. It looks like, yeah. I finished trading early in the morning, but it to me it looks like it's range expanding at this point. Well, this is also interesting as well. Notice how the price goes up, but the volume doesn't go up. What's kind of weird about analyzing the delta like in chunks like this, where you kind of do this, there could be all this, there's these smaller events that are happening where you have to kind of look at it bar by bar. And this is why it looks like this. It's kind of like NASDAQ and ES. If you look at charts, they kind of look the same, but then they drift apart. It's because you have less liquidity on NASDAQ, so naturally it just starts to drift. That's kind of, with all this reloading and spoofing, that's what's happening. It's such small, it's so small, but it's enough to like deviate the fuck out of the delta in the price action overall like this. So they do rebalance the inventory there. Oh yeah, there was also, let's see. Here's the dump. So if we look at this 3 minute right here, see this is from the 29th. Look at that giant buy. They ended up reclaiming it, which actually dumped. So this giant buy right here, the price action didn't move as much. Notice how you have all this fucking volume and the price doesn't quite go as high. Like, look, we'll do it, or we'll kind of go like this. So, you know, we'll go like this so you can just see the difference. Come on. And this is what I've been kind of looking for. Can I get the right? Why is it not giving me the right? Does this indicator not work on here? Either way, there's a fucking giant reclaim. And this goes to me talking about them balancing the fucking book. Either way, this thing is 50 ticks tall from this large deal of volume, but when they actually overdo it too. They not only do they go through it, but they also overdo it as well. But it just goes for way more fucking ticks, and that happens at times. So they could have campaigned up here because it did dump when you look at the 30-second from Anna's perspective. The volume bars sort of match the price. Like, look at this up move. It looks natural. Like, there's no, like, super hardcore reloading in a lot of this section as it dumps in. But they ended up just sort of retracing that fucking delta reclaim, and it goes back to what I was saying. And I didn't even look at this today. Like, I didn't know they did that because I finished trading earlier. But I would encourage you to rewatch this presentation a couple of times. Like, I think it's very important when you're consuming material that you go through it a few times, get some experience, trade for 2 weeks, and then watch this stream again and be like, oh, shit. Because you're probably not absorbing every goddamn thing that's coming out of my mouth, especially in a 2-hour stream. But if we look at it, it's interesting because, like, of how they start to reload it and shit. Like right here, it's pretty flat, and it kind of looks natural right in this zone. And then, obviously, initially right in here, right in this spot, there was reloading hardcore. And then the volume, it's interesting because I haven't been looking at the delta from this lens of reality, because it really is a magic trick. It's like when you watch The Magician saw the fucking lady in half. You're like, holy shit, it looks real. But once you know how the trick is done, you just look at it different. And now I'm just, because you guys look at certain shit I look at, and it just means something totally different for you. And the lens of reality you see it from and your level of experience. Like because I've traded for so long in ES that it's just, I have this intimate feel for it, so I can create these little narratives and shit. And it's interesting because I haven't really seen ES work well with the delta for the last week and a half that I've been using it. There's been so much manipulation, and it's interesting to see Anna's principle right now. This is kind of a discovery for me right this moment, to see how the volume bars and the price bars almost look identical, and it's not like there's hardcore fucking reloading. Like, these little pullbacks and everything are relatively, I mean, there's something going on in this little section and shit. Actually, not too bad. Just a little bit, but still, it's relatively clean looking, and I've not seen that yet. And they move almost like the same. Because you'll see large, I mean, kind of like what we saw here. You'll see large movements, but then it like reloads hard. And it's really evident in fucking stocks. Because I'm like, I'm going to dust off stocks. And because I used to do a lot of correlations with stocks. I'm like, maybe the deltas. Dude, in stocks, you'll see a huge delta spike. And then the price didn't move. And I don't know if it's like some dark pool trade or some off-market trade being reported like 15 minutes later because certain trades have to be reported later or some shit. Maybe that's what's happening. But you'll just see these mass spikes and then the price doesn't do shit. And there'll be other times where it's just like in stocks, it just breathes. It's like just a little bit of buying, but then the price fucking goes to the moon. And it's like, what the fuck? Fuck, I was looking at stocks all day. I'm trying to understand it. It's nothing like futures. Anyways, let's see what you guys are saying. I got smoked. Let's see. I held for 30 points on the up move on. God damn, 30 points, but that was NASDAQ. Let's see. Fucker ripped 300 points. Was it 300 points? And probably 300 ticks, actually. It was ticks. It's going to be, you have to, yeah, it was 320 ticks. You actually, it's because you got to do it like this. So, 320 divided by 4. Because there's 4 ticks per point. Think of it like quarters. There's 4 quarters in a dollar. So it actually went 80 points. Just so you know. Where can we have the book? Anna's book? Somebody put the PDF in my Discord for free. You can find the PDF online. I bought it from Audible personally because she reads it. And there's a version on YouTube where an AI reads it. So it's out there. Do you have the name? I don't understand. The English is bad. Thank you, Sophos, for getting that. Let's see. Let me see. I want to read everything you guys are saying. Market simulation video. Crafer. Yes, sir, Brian. That's the one. That's where it starts the barcode. Go straight to the grower. Basically become the market maker is what Jellybean's saying. They're saying that, so this goes back to Anchor GWAP. Dude, I might come back to it one day. I don't know, man. I'm a scalper, though, and I don't need it. You know what I mean? What is NADRO? It's Merritt Black's shit. It means narrative, acceptance, developing value area, rhythm, order flow. If you're doing big swings, it might be useful. Okay, I didn't realize you guys had a chat with each other. Thank you. Well, I apologize to the guy I put in timeout. I think he was arguing with somebody else. I didn't realize that. Thanks for all the content. It's well helpful in my own trading. Yeah, I got whacked and then tried to catch the bounce and then got whacked again. Then I consolidated and I had to have the balls to try it again. I'm curious if you were over trading or some shit. There might be some psychological shit. But also that move is triggering FOMO in you, and it kind of goes back to what I was talking, most likely. Anyways, it really comes down to the psychological aspect. Do you believe that institutions do liquidity grabs? Man, I don't fucking know, dude. There's definitely like support and resistance going on in the price action at times. Well, liquidity grab in what way? A large resting limit order that's higher than average, those tend to get filled. They do. I mean, sometimes the price action drifts from them, but you'll see like a 500 lot and they do get filled. But is that wash trading? I really don't fucking know when it comes, like, what your definition of liquidity is. I'm really curious. Do you know about the Brad? Yes, the Brad story. That from Flash Boys. That's what I was talking about it earlier in the fucking stream. He noticed his orders wouldn't get filled and eventually discovered hedge funds were using high-speed connections. Yes, it's a good fucking story. Dude, and I love the way the author writes it because he cusses in a storm up in it in certain sections. If you've not... I listen to audiobooks, personally. Flash Boys is so good. He ended up starting his own exchange. Dude, it's so good because, like, this guy, he's working for Royal Canadian Bank, right? And, like, every time he put a bid offer in, it would just get front ran. And he's like, dude, I'm the fucking event. And he's like me. He's like me with you guys right now. He's like, I swear something's going on. And then they started to figure it out. And then it tells another story about this fucking guy from, like, Ireland or some shit who's laying the fiber optics for these people and the server room and how they wanted to be closer in the server room. And Toys R Us used to have a server in there, and they left a sticker on it so it would still look like it was Toys R Us. And this dude had all these maps of these lines, and he made a lot of money laying these lines because he worked for telecommunications or whatever. So this fucking guy ends up like... he wants to do something else with his life, even though he's making great money, which I don't blame him because I was in real estate for a long time. Good money for me at some point. Like, I moved into commercial, but God, I fucking hated it. And, like, Brad, who is working for the Royal Canadian Bank, who's, like, trying to figure out what the fuck is going on, ends up hiring the guy that was laying the fucking fiber optic lines. And it's just such a... it's like, if you're a trader, it's just such a good, like, story. Flash Boys is such a good story. The guy that wrote Flash Boys wrote The Big Short. I think Flash Boys should have been turned into a movie. There is a movie, and it kind of sucks. And it's almost... I don't remember the name of it. But it is literally these guys who are drilling through a mountain. Because Flash Boys starts off where... they are drilling through these mountains, and they need the lines as straight as possible to get the latency down. And the contractors are like, why can't we go around? And they're not telling them why. They're like, we need to go straight through the fucking mountain. There's a movie where the beginning of Flash Boys where they're going through the mountains, they needed to lay like a perfectly straight fucking line across all these states. They're telling people, like, I need to dig under your... there's a movie, I don't remember what it's called, but it's sort of that story. And I think it's these two brothers, and one of them's a coder, and he's like nuts, like fucking insane. And they're working for a hedge fund, and they like kind of leave. Now it's not really done with fiber optic lines. It's like microwave towers that are submitting orders. But in the movie, it's not. It's kind of like Flash Boys, but it's actually a race between them laying their fiber optic line versus all these towers that start getting put up. It's a pretty interesting movie, but I think the book Flash Boys is really fucking good. Just a good story. And to learn from it and to realize how fucked up shit has been this entire fucking time, to be fair. Let's see. Or is liquidity grab just retail talk? I think liquidity is kind of used in multiple ways. True liquidity is when it's large on the bid offer. And those do get taken. Is it wash trading or is it two large traders meeting with each other? That's why they have That's why on the last 10 minutes of the market, you have all that volume coming in and the bids and offers pump up, and then you have like hundreds of lots coming in. That's allowing large players to get size in without moving the market too much. I would encourage you guys to learn about the whole mock and lock, market on close and limit on close. That's why the last 10 minutes is nuts, is it's allowing large players to actually get their fucking orders in instead of playing this game where they got to cut it up all goddamn day long. Liquidity grabs, I think from a retail perspective, would be sort of like the top of a range or some shit, like a flat area where you would think a lot of stops are placed. Potentially. I really don't know. But on the 5 minute and 6 candles ripped up 300 ticks. The 5 and the 3 minute. Let me look at what you're talking about. Well, this is a 3 minute. Yeah, I mean, it did rip up, but you could see where it did dump right here a little bit. That whole rip up was like, took a hot minute to fucking pan out. What, 42 to also today was earnings from Microsoft, but I really don't. Let's see. Maybe it's a 5 minute because someone else was trying to teach me and it worked at Citibank. Maybe a small stop hump, but they wouldn't move price to grab liquidity as liquidity is inside ranges. And they said that it really does happen, and it's like an obvious short or long to take, and then they push it where most people's stops are. And then, well, there is payment for order flow. And I wouldn't be surprised if, like, your stop order, even though it's not actually in the market, but also, dude, they understand how we think. If you watch the beginning of this stream, I talked about when the GameStop and AMC shit was happening. People who had no business had Robinhood accounts all of a sudden. And then there's that video footage of Jim Cramer. Again, Jim Cramer market manipulation on YouTube. It should be the first video. He talks about like really fucked up tactics, how to like spin a news piece to attract other players. Kind of a pump and dump almost, but it's the other one. It's called like short and distort or some shit if it's going to the short side. But I mean, like with news and all that, according to Anna Cooling, the market makers use news events to shift their inventory around very quickly, which I've noticed too. I've noticed setups that were just perfectly set up, and then all of a sudden there's like some tariff shit. And I'm like, damn, dude, I swear to fuck they know what I'm doing because they set it up for me or some shit. Hello, what other books would you recommend? Anna Cooling's volume analysis book, but look at it from a delta perspective. Flash Boys for a good read. Bounce by Matthew Sid, which is not really a trading book. It's about how talent is overrated and how pro athletes got really good. Because I think trading is a performance sport, so learning what professional athletes do to get good is important. Also, I would learn about the quiet eye technique. Professional athletes, there's something going on with their eyes where they have more follow through, shit like that. I practice it like when I'm driving. I remember when I did kart racing, this one guy that was really good kept saying, you need to look as far as you can see. You got to turn your head and look as far as you can see. So like when I drive, I want to look at the end of the road where the shoulder meets the middle line and just like look at that midpoint and focus on that. So just like things to boost performance. As far as trading goes, I wouldn't know anything else to be fair. Let's see. What else are you saying? And then Kay gets busy for the info. I'm currently lent 250 Ethereum micros. Victoria, I've been studying PVSRA for the past 5 years. Not sure if it's the same as Anna. We'll check it out. But both sound like tinfoil conspiracy. What is that? I gotta look that up. Let me look it up. You said PV. Fuck. What did you say? PVSRA. What the hell is that? What the fuck is this? I've never heard of it. Stands for price volume support and resistance analysis. Now with its own thread. Yeah, she talks about patch trading, like price action trading, and how it makes no sense without volume. That's kind of how I trade, I would say, a little bit. I'm sure there's something else deeper going on. Order flow is useless right now. Yeah, I've seen a video about that the other night. Funny you mentioned it. All right, it's been 2.5 hours. I was supposed to go do some shit with... I need to go. I actually got to get the fuck out of here. I'll see you guys later.